And welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 10th, 2025, and we're diving into TeraWulf's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. TeraWulf has had a remarkable quarter, and I'm excited to discuss their strategic growth and financial performance.
Revenue and profitability overview. Let's start with the financials. TeraWulf reported a revenue of $50.6 million for Q3 2025, which is an 87% increase year over year. However, the adjusted EPS came in at $0.03, significantly below the forecast of -$0.04. John, what are your thoughts on these numbers?
The revenue growth is impressive, driven by higher Bitcoin prices and the commencement of HPC lease revenue. However, the substantial net loss of $455.5 million and the negative EPS highlight the challenges TeraWulf faces in managing costs and scaling operations. Despite this, their cash position remains strong at $712.8 million, providing a solid foundation for future growth.
Strategic expansions and partnerships. TeraWulf has been making strategic moves with significant expansions and partnerships. They reported $7.2 million in HPC lease revenue and completed over $5 billion in long-term financings. Can you elaborate on their strategic initiatives, John?
Absolutely. TeraWulf's partnership with Google and Fluidstack is a game changer. The Abernathy JV in Texas, with an initial 240 megawatts capacity and potential expansion to 600 megawatts, is backed by a $1.3 billion Google credit enhancement. This not only strengthens their financial position, but also solidifies their leadership in sustainable HPC infrastructure.
Operational efficiencies and future outlook. Operationally, TeraWulf is making strides with their Lake Mariner campus and the new Cayuga site. What does this mean for their future outlook?
The Lake Mariner campus is a cornerstone of their operations, with 245 megawatts of Bitcoin mining capacity. The 80-year lease at the Cayuga site sets the stage for large-scale HPC deployment starting in 2027. CEO Paul Prager emphasized their focus on execution and growth, targeting 250 to 500 megawatts of new capacity annually. This positions TeraWulf well for long-term success.
Financial risks and challenges. Despite the positive developments, TeraWulf faces financial risks, particularly with their debt levels. Can you discuss these challenges?
Indeed, TeraWulf's total debt stands at approximately $1.5 billion, with significant convertible notes due in the coming years. The interest expense of $9.83 million this quarter is a concern, highlighting the need for careful financial management. While their strategic initiatives are promising, managing this high debt will be crucial for sustainable growth.
Key takeaways. In summary, TeraWulf's Q3 2025 results showcase significant revenue growth and strategic partnerships, but also highlight challenges with profitability and debt management. John, any final thoughts on their investment prospects?
TeraWulf's strategic expansions and strong partnerships position them well for future growth. However, investors should be mindful of the financial risks associated with their high debt levels. Overall, TeraWulf presents a compelling opportunity for those willing to navigate these challenges.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on TeraWulf's performance in the comments below.